The word inflation is everywhere, but what exactly is it, and how can you prepare for it? Before we dig deep into this topic, make sure to subscribe to Simply Economics and hit the notification bell for more educational and entertaining economic content. Your support of this channel will definitely go a long way and will ensure that we can produce more amazing content such as this one. Have you observed the cost of your desired flight for a forthcoming holiday is more expensive than last year, or that your regular grocery bill has increased even though you're still purchasing the same items? If so, this recent spike in inflation across the nation is likely to blame. According to a recent Consumer Price Index report, during the past year, food prices have risen by 11%, fuel costs have advanced dramatically with an increase of 40%, electricity bills increased 15%, and gas utilities saw a 33% surge. While the short-term implications of inflation tend to get all the attention, its long-term effects can be even more alarming. That's why it is essential to comprehend how you can preserve your assets over time. This video will assist in that effort so that you can have lasting security and peace of mind. So what precisely is inflation? When the number of dollars in circulation exceeds what is currently available for purchase, it causes prices to rise. This phenomenon is known as inflation and ultimately means that your money becomes progressively worth less with time. If the cost of a week's worth of groceries goes up 8%, yet your salary only increases by 3%, you are losing out on 5% in terms of purchasing power. This is what happens when your income or assets don't rise along with inflation rates, leaving you struggling to make ends meet. Inevitable in a flourishing economy, inflation has functioned around an average of 2.5% on an annual basis over the past 10 years as noted by Federal Reserve data. But right now, inflation is the highest it's been in 40 years. How can we fight inflation? Unraveling the complexity of inflation presents no easy solution, as it can have a wide-reaching impact on your finances. In some cases, unfortunately, you may just have to accept inflation for what it is and move forward. Nevertheless, according to financial experts, you can take action to mitigate the repercussions of inflation. Tips to beat inflation according to experts. Inflation is an inevitable economic reality, but with the right planning, you can safeguard yourself and your money. To get started, consider this list of suggestions from the Forbes Finance Council, top investors, and experienced financial planners on how to prepare for inflation's impact. Number 1. If you haven't started budgeting yet, now is the time to begin. By budgeting, you can easily gauge the impacts of inflation on your spending. It doesn't matter if it's an app, an online spreadsheet, or manual tracking. Any one of these is helpful for keeping a closer eye on your finances. Additionally, this will also help you evaluate where adjustments to spending habits and/or chasing better prices is beneficial. If starting out in budgeting is intimidating or overwhelming for you, there are plenty of articles and videos with tips on crafting a plan that works best for you, plus some awesome personal budgeting tools. Number 2, set up an emergency fund. During periods of high inflation, recessions and slow markets are likely to happen, leaving your income vulnerable. Therefore, it is more critical than ever to have a backup emergency fund that can be quickly accessed without having to pay any fees. It's recommended that this should cover at least 3 to 6 months' worth of living expenses for added security. For those who have multiple incomes, they may only require a couple of months' worth of financial resources. Yet couples or single people with just one income source might need additional savings. Similarly, any individual whose economic security is more vulnerable to decrease and earnings fluctuate should also consider storing away more money as an extra cushion. Number 3, avoid big purchases. Recent home and car buyers may have noticed that these pricey items are moving faster than ever, as well as at a higher cost. Since 2021, the price of new vehicles has gone up by over 9%, while pre-owned vehicles increased by around 7%, according to an updated CPI report. On top of this, shelter costs, which include rent and mortgages, rose more than 6%. Don't let the worry of being left behind encourage you to make a decision that doesn't feel right. If making an extravagant purchase during times of inflation is unavoidable, take your time and scrutinize the market cautiously. Number 4, diversify your portfolio. Over the last decade or so, inflation had been largely overlooked by investors, but now is an opportune moment for a deeper examination of real returns when accounting for taxes and inflation. As inflation grows, interest rates usually follow in their wake. This can be beneficial for savers who are finally able to achieve reasonable returns from their savings accounts, money market accounts, and certificates of deposit. However, although the rates have increased significantly, these types of investments generally do not keep up with the pace of inflation. Number 5. Examine short and medium-term fixed accounts. If you're looking to safeguard your retirement investments against the signs of inflation and an impending recession, then it is wise to consider short-term and mid-term fixed accounts like 2 to 5 year annuities. Compared to a bank certificate of deposit, which is a low-risk savings tool, or any other money market accounts that offer little guaranteed returns, investing in a short mid-term annuity could give up to 3% rate at current trends. Moreover, investors can spread the risk across multiple annuities to increase their earnings and potentially beat inflation. Number 6. Limit your wants and non-essential expenses. To protect yourself from the financial repercussions of inflation, it's best to avoid indulging in too many superfluous needs. That is to say, if you don't have a tendency of drowning your wallet with material goods, then you'll be better equipped to handle life's misfortunes. In times of financial hardship, cutting back on discretionary spending, recreational activities, restaurants, and more can be an easy way to quickly reduce expenses. If you're looking to take control of your finances, a budgeting app is a way to go. This will not only help you monitor your spending habits, but will also give you the opportunity to identify any troubling trends before they become ingrained in your financial routine. Number 7. Stay invested in equities that grow over time. After an extended time of subdued inflation, markets are struggling to comprehend shifting inflation expectations. With this uncertainty pervasive in the market, volatility is rising exponentially. The prudent strategy during such times is to remain invested with a focus on long-term growth assets like equities, as research has revealed that these investments yield their best returns when inflation lies between 2% and 4%. In order to make sure you are still able to reach your financial goals despite inflation, it's important to include these in your portfolio: Treasury inflation-protected securities, shorter-term bonds, floating-rate instruments such as mortgage-backed securities, and collateralized debt obligations. Number 8. Increase active and passive income. To safeguard your wealth in times of inflation, there are 2 primary methods. Firstly, hold assets that protect against such price hikes like gold or silver. Secondly, you can grow both passive and active income at a rate faster than the going inflation rate. To keep up with the average 5% annual rate of inflation, it is essential to regularly raise your income each year by no less than that amount. Number 9. Find out more about the financial market. Working towards financial security is like devouring a yummy cake. You'll want to savor every bite and understand the implications of your actions. Take it one step at a time, but be sure to utilize good financial practices along the way. Do your research and find out as much as you can about the current financial market. Read publications, speak with professionals, and attend seminars or webinars to stay informed. Just make sure that whatever sources you take advice from are trustworthy and unbiased. Having an understanding of the current market will help you better prepare for any potential inflation. And number 10, review your insurance policies and investments regularly. It is also essential that you review your existing investments and insurance policies on a regular basis to ensure that they are still relevant in the current market. This will enable you to adjust them as necessary and make sure that everything is up to date with your changing financial situation. Additionally, you can use this tip to decide whether or not it is worth investing in a new asset class, such as foreign exchange trading. Finally, don't be afraid to speak to a financial advisor. They will be able to provide valuable insights and guidance on how to best protect yourself from inflation and get the most out of your investments. By understanding the risk of inflation and making smart decisions about your finances, you can safeguard yourself from its impacts for years to come. Added bonus tip: spread out your savings. In addition to the tips mentioned in this video, another great way to protect yourself against inflation is to spread out your savings across multiple accounts, preferably high-yield savings accounts. These are just a few of the strategies outlined by experts that could help prepare you for periods of high inflation. It's worth considering them all before making any decisions on how best to protect your finances in 2023. Take your economic knowledge to the next level and subscribe to Simply Economics today. Share with us your insights on inflation in the comments below. Then don't forget to turn on notifications so you won't miss out on any of our amazing content.